Having a plan in place can help you prepare for unexpected surprises by doing research on each investment opportunity. This knowledge allows you to make decisions about how to allocate your money towards an asset or goal that will help you reach your desired outcome, whether it be capital appreciation or income generation from things like interest dividends. Analyzing different investment opportunities is important for achieving your targets, since markets and trading can change quickly. Evaluating each option in relation to your goals can make all the difference between success and failure when trying to get lucrative returns in the future. Before investing, it's important to think about how much risk you're comfortable with and how long you plan to hold the asset. Diversifying your investments across different assets can help reduce the risk of losing money. When selecting individual stocks, you should look at things like the price-to-earnings ratio, return on equity, ROE, and relative strength index to help increase potential gains and reduce the risk of losses from overbought markets. Having a plan before investing can help you avoid big losses due to market shifts. Take your time to evaluate each option and consider the rate of return versus the risk involved. Doing this will help you maximize returns and feel comfortable with both short-term goals like income generation and long-term goals like capital appreciation, even in uncertain economic times. Taxes can have a big impact on how much money you make from investing, so it's important to understand the different rules around taxes. Long-term investments usually have lower taxes than short-term investments, and you should think about dividends as well as buying and selling stocks to get the best results.